welcome to another edition of Roadhouse Live. We are live. Today is June 7th, 2023. Bender, we're in the June, man. We talked about this earlier, the halfway mark, but we're in the June. We're all up and in it.
We are here. Yes, we are in the June.
We are in the June, which means July would be next.
Yeah, it's uncanny how good we are at predicting this piece of the puzzle.
There's some, it's like, hey, we're on top of shit here. All right. So yesterday we had one of those sloppy chop, big old red candle and then 35 little green candle back up to where basically, we close kind of how we closed. Today's setup kind of looks the same, but there are some exceptions sitting out there. Tesla is absolutely lit on fire to the upside. And also my not so favorite stock Play banging because folks like playing video games and eating shitty food. So Play on fire. Some interesting pieces there as far as that. One thing to kind of take a look at overall is to see how some of these commodity prices start moving around. With that dam being blown out in Ukraine, apparently wheat got a pretty good pop. So kind of watching that action to see if there's more pressure there as far as, the potential impacts to the supply chain, food costs, that kind of stuff. Who knows? But we do know that when these things happen, it tends to be pretty dramatic. We have the dollar basically rallying off of some data this morning, which seemed a little bit counterintuitive, but the dollar has been stabilizing and building a base in through here, for the past, I want to say 2 weeks, and is on the verge of potentially putting in a higher high here, or a double top. That's the dollar is at a very in between position in through here. If you want to go ahead and look at a 4 or 5 hour, you can see that being very, very in your face. As far as flow that matters that we've been seeing over the past few days, we saw some pretty strong flow coming into Marvell. We saw strong, and Marvell has a pop this morning. We saw strong flow coming into Google. Google has performed well the past few sessions. Who else do we have strong flow coming into? Shop had some ridiculous flow that they were banging up in the 65s, and this morning they announced that they sold off part of their logistics business, I believe. So Shop also in the spotlight as far as moving higher. The Tesla thing is interesting because I'm not seeing a lot of glaring news coming out of it, other than if you're looking at the chart from a technical standpoint, clearing that 220 to 223 level opens the door to 228, which is banging around now. And then ultimately, which opens that door up to potentially getting that gap fill up into 250-ish. You and I were talking about that last week. Do you have any additional thoughts on that?
I have those 250 calls.
Right on.
I agree with you. I think that pop over 220. I'll go back to the chart and throw some lines on it, throw some fibs on it. But I was looking for, I took a starter position, looking at that potential for a 220 break, also knowing that it could have had a little bit deeper pullback before going for it, but it just went for it. So, I'll throw out a chart here in a bit of
cool. The other thing
some lines on it
that I want to touch on a little bit, which it's like we're hearing like pitter patter of like, oh, is this the next, potential catastrophe, the next, this is going to create the next knife plunge. It's like this flood of more than $1 trillion worth of treasury bills that are expected to come back on and be dumped into the market between now and I believe September. Some are saying, hey, it's no big deal. It's not a problem. It's a nothing. Some are saying, whoa, this is going to overwhelm the market and bust the plumbing. At the end of the day, these are more types of headlines that while they may play out, we're going to get a pretty good idea of how to kind of see it in a lot of ways based on some of the flow that's coming in. And while we have seen some, not so bullish lines come in, individual tickers are still getting pretty decent and legitimate bull bets. And I think that's something to kind of take note of. It's like through the years, Bender, we've seen moments in time within the market to where the indexes can wibble wobble and move and groove, but some individual tickers really move. I think Tesla was a good example of that yesterday. And I think that there were several others. At Shop, another great example of that yesterday, as far as the market basically holding flat in a lot of ways. But yet we saw some tickers really move. And I think that also speaks back to a lot of people have been talking about overall breadth, right? Breadth, market breadth. Yesterday was one of those days that kind of throws that out of the window a little bit, when you have the IWM shaking and baking the way it did. And if you take out and you look at the S&P 400, it had a really nice day yesterday with some of these laggards starting to play catch up. One area that I saw a little bit of flow and some dark pools come into that I think should be of note were cruise lines. Cruise lines had activity yesterday that I think should be on watch, and we should be very keen to, as far as any type of supportive or additional flow. So that's pretty much all I have. The theme continues to be setting the table for next week with CPI and FOMC. That is the table setting. That is what this is all about for this week. So we could continue to trade sideways, but I think a lot of these ES technicians and a lot of these chart folks keep on referring to, hey, we're just building out this massive consolidating flag. Some would say it's a bull flag. I don't know what it is. I just know that flow continues to tap to the upside, and until that changes, based on my experience of getting, I don't want to say demolished, but beat up pretty good over the last month, that it's best to wait for the flow to kind of tell you. Because if there is a massive drawdown, if the market does have a big pull, it's going to be something that you can catch on more than just a little 15, 5-minute, 3-minute chart. It's going to be prolonged and it's going to be intense. So Armageddon-ish, let's kind of cool the jets with a lot of that and let the flow kind of speak, because flow and charts have been absolutely on point, while narrative has been a big old bag of soaking shit that people have tried to sort through. And if you're betting on what you're seeing and hearing when it comes to the narrative, odds are you came up empty. So with that being said, Bender, chart us up, buddy.
Yeah, I think we talked about that a little bit late last week, about the fact that not getting too married to the idea that that this was, whether it's just a squeeze or that this was all on the back of, that this entire move, AI. I know that, timing was there to say that, this, maybe triggered some stuff, but, we talked about the fact that if we see some of that rotation, that, this can certainly continue. Obviously, yesterday's idea for me was just an idea, right? Like if we see lows late Tuesday, then maybe that sets up the rally for late Wednesday or Thursday and Friday. That's not what happened. We didn't get that. Now, I think the levels that, we talked about, if above this, then we look for this. If below this, then we kind of look for this. More often than not, those play out. And that's, if I go back into the little monologue you just gave, and the piece of it at the end there, it's like, at the end of the day, no matter what you think of the narrative or the macro, no matter what you think, right? It's all about the levels. It's all about picking those spots and looking for, whether you're looking for, if you play breakouts and you're looking for, continuation moves, or you're looking for, those potential reversal areas. It doesn't matter what you think should happen because of news or anything else. if you just stick to, what you see, and obviously what I'm talking about right now is short-term trading, right? I'm not talking about the longer term stuff. Like if you've got positions that you're sitting green in and all of a sudden, you start kind of the hair on your arm stands up or the back of your neck because you're like, man, this shit, something doesn't seem right. Right. Okay. Then the longer term stuff, maybe you go, okay, maybe I should take some off the table and look for, a re-entry somewhere. I think I'll get a better price. That's different. Right. But day to day, it's all about the levels and, something that I've mentioned before that I continue to try to work on with myself is just, not being one-sided or married to a direction, because that's when you get fucked, is when you're like, I think yesterday when we hit that low point yesterday and we kind of consolidated there for a minute, I was looking for a continued move down, but I also had my stop set pretty tight. And, as soon as we kind of popped above that little consolidation area, and I said, Hells, is this where they, we stopped out the shorts, they came down, they stopped out the longs, consolidate, and now we fire. And you said, yeah, I think they're going to push it up. And sure enough, that's what they did. Right.
Yeah,
So
because it's like the flow was there. And I don't want to interrupt you, but you brought up you said something that I think is important to remember. You said it's all about the levels. It's all about the levels. So somebody can look at this run and be like, well, we just keep on plowing through resistance over and over and over again. It's like there's resistance there and we just rip it like it's nothing. It's like we have to go back to, if you go back and you apply that same logic when we sold down to that 358 level, when we sold down there, we were smashing through any level of support. It's as if it wasn't even there. So it's like if you're being an honest broker, and I'm not referring to you, I'm just saying anybody who's kind of looking at this, it's like support and resistance are meant to be shattered.
yeah.
Don't forget that part of it. And I'm not saying you, but I'm saying don't forget that piece of it. They're meant to be shattered. They're designed to be shattered. So yeah, please go ahead.
Yeah. And we don't really talk about support and resistance a whole lot, right? We're looking for, those targets for liquidity, those areas, in the chart where, it makes sense for price to return to and rebalance, those kinds of things. But yeah, absolutely. I mean, support is support until it's not. And that's why it's important to be able to be flexible and go, okay, well, I was looking for this to hold as resistance, but it didn't. Okay. It didn't. What does that mean? Well, it means that it's not respecting that level of resistance. And, now you got to be looking at, well, it's not respecting these levels. Either I don't trade or I need to switch potentially and think about this. Think about the setup from the other side of the coin. Right. And that's when you get too committed to one side of things, it can be really difficult to look at it and go, okay, well, I was looking for a short. If I was looking for a long, what would I be looking for? And just that simple question alone, I think, next time you're looking for a long, right? Look at it a second time and go, okay, I'm looking for a long, but if I was looking for a short, what would I be looking for? Yeah, just maybe help give yourself a different perspective and look at it, from both sides. And Mr. T says this, I've heard other people say this, but it's like, if you can make a case for both directions, then often that's a good time to just not do anything, right? It should be one-sided. If you're looking at it going, well, I don't fucking know, I can make a case either way. Well, then those aren't necessarily probably not your highest probability trades, right? Okay. So what we're looking at here, what I've got on the screen right now is a 60-minute. And I've marked out, actually, the only reason I have the 60-minute on here is just to show the midpoint here of the week at the 42.8725. And, I drew this little shaded box in here so you can see when I go down to the 15-minute, it's like, we consolidated down here below it in the value area for the week, below that 50% level, below that midpoint, right? And then we got above it, kind of chopped around above it, swung back below it, then back above. Like this midpoint area has, you can kind of see that splitting this consolidation down here and the consolidation up here. So I'll be kind of keeping track of that. The other thing that I'm showing on here, this yellow shaded box is essentially the Asia session, right? And you can see that London took out the Asia low and the Asia high. Now, I don't know what happens today, but Mr. T would say that that when London takes out both the highs and the lows, that's a potential setup for a search and destroy day where we ultimately don't go anywhere again, which would make sense on a Wednesday, right? So just something to keep in mind. Like there wasn't a clear trend with the overnight action and pre-market action, right? It's take out the highs, take out the lows, like that, take everybody out, just frustrate people. So I'm going into the day knowing that this is a potential scenario and we may end up with that sort of price action, right? With that said, I showed you where the midpoint of the week is. 786 retracement of that down move is 42.9775. You can see on this 15-minute candle here, everything that got left behind, right? On a move up, we're looking at 43.02 to get to the top of that 15-minute fair value gap. And then yesterday's high up at, Sunday night high up at 43.0575. I mean, there's not a whole lot else, looking at the 15-minute here, if it decides to rally, we've got this previous fair value gap here that we've been talking about up to 43.1525, and then these fib extensions up at, 43.20, 43.25 and 43.29 or something like that. If it decides to sell, below that London session, be on the lookout. The fact, again, that it took the Asia highs, took the Asia lows. Maybe we get, something similar in the New York session. Maybe we take out London's highs and lows. So be on the lookout for that. But below the London lows, you have this level down here, this shaded box that I've had on here for a while, kind of been tracking this for a few days, this fair value gap here, this 15-minute fair value gap. We filled all that in, right? So there's not really a good reason to go back down into that again, although, we kind of consolidated in that fair value gap with, a couple wicks below it. But maybe it goes and retests it. I think until we're, again, these 15-minute candles, you get the wick below and then right back up into it, wick below and then right back up into it. And that was all it gave, right? So it's hard to, we can't really get bearish and start looking for these, levels down here until, in my opinion, until this area right here becomes resistance, meaning we get a candle that opens and closes below it and it gets used as resistance, makes a lower low. Okay, now we can start targeting some of these levels down here, 4240s, you know, and then maybe a 4220 test. But, you know, that can't really happen. I'm not really looking for that at this point until we get below that box. If we get below that box, use it as resistance, make a lower low. Then we trade up into a fair value gap and look for those levels below. And the same thing goes with, you know, any sort of upside move right now, kind of capped by this 15-minute fair value gap in here, right? Which is it's not a big area. I wouldn't say it's a big area. You've got what, seven handles in there. But you know, if we can get through that, again, sort of same scenario. If we can get through this, maybe above 43.05, come back, test in here as support, make a higher high with a fair value gap, trade down into that, then I would look for a trade up, at least up to the top of that this old fair value gap here, 43.15. And above that, again, these extensions up here. And that's about it.
Nice. Good stuff. Yeah, that kind of ties into what I was looking at. That was just one that I learned yesterday from Mr. T. So you're crossing a fair value gap, and then I watched one of his tape reading things from yesterday, I think it was, and because that was always something for me. I'm like, so when does a fair value gap not matter anymore? So this was the one that he was showing in his class from yesterday, was this weekly, you know, it's kind of similar to what we usually talk about, like longer time frame setup will have more of an impact. So he was looking at this weekly fair value gap right here, and then swapping to the daily, this close above the fair value gap was his signal, he would say, on this candle here, that now we would look at this inverse, basically look at this fair value gap to act as support. So that was kind of his thing there. And so that's why I like looking here. He's looking at it, using it as support. And so when I was thinking about that, then it had me go back and look at this setup that I wasn't on voice, but I was posting in the room, this setup on the ES yesterday, where I was looking at this 15-minute fair value gap. And you could see each time we traded into it, we never got a candle that the body closed below the fair value gap. And it worked as support each time, because I was like looking for a long right around here. I was posting in the room, I wanted to take ES long off this 42.78.25 yesterday. And then if we threw on the fibs, look for that optimal trade entry. So it's like, so that was kind of the setup there, and it worked out. You just would have had to take, if you took the long right off the fib, then you would have had to take some heat down to here, but still respected this 786 fib, and never got a candle to close below. So that kind of lines up with what you were showing there. So just kind of if you're looking at a fair value gap, wondering when do I think this one may not matter, or when am I looking to see if this will work as resistance instead of support. In this case, of you finding your time frame you looked at it on, and then watching for a candle body to close outside of it, and then waiting for it to return to that area potentially as support or resistance. So that kind of ties into what you were showing there on the longer time frame for the ES. So that was a good one there. Let's jump over to some of these other tickers. That's not what I wanted. Let's see. Yeah, let's look at the NASDAQ. All right. So when I was charting this out last night, I was like, oh, this could maybe be a head and shoulders. But now it's starting to look a little bit more like this NVIDIA. That's like, is this going to be a head and shoulders, or is this just going to be a big old bull flag? Let's see. Get this trend line thing going. So it's like we got this. This is our new week opening gap. This is a little fair value gap you can see left open there. So it's like, yeah, maybe they just want to bull flag this. And when I was looking at NVIDIA, it looked very similar too. So it's like, okay, so we've got our upside targets all the way up there to 647.75. And then this is this super longer term trend line that goes all the way back. So potentially you could see some resistance if we do pop this bull flag up here, maybe in this, this 724.50 up there on the NASDAQ for downside targets. First, I'll be looking for the reaction to 633.50. You can see how many times that order block line has been important, basically the wick of the midpoint of this wick. If we lose that, then I'll be looking to this 480.75, and then we've got yellow boxes are the daily fair value gaps below, and then this, you can clearly see this 4-hour area left open there on the NASDAQ. The Russell's already on fire. Let's look at that. Let's check. Yeah, so the Russell, this yellow box was a daily fair value gap. You can see back. This is still open, so the Russell bench has room up to that 1883.30, and then you can clearly see, here's our megaphone that we broke out of, and this little box here, that's the gap, and then we've left this area, all this open on a 4-hour for potential fair value gaps to fill in. And we did see some bullish shots being taken on the IWM. They were continuing even for today. There were some nice sweepers, so those guys are probably going to wake up happy. So that's what we'll be looking at, potentially upside targets up to that 1883.30, and then if we're pushing down, see how we react to this 1849.50. There's the new opening gap, 1835.80. So we'll just kind of have to see what we get there. Let's see. Let's jump over to NVIDIA. And stock. There we go. Oh, got a little too excited for that one. All right, let's see. All right, so went a little bit more aggressive on the triggers today, just because NVIDIA is getting super compressed. I think it'll be a good one to watch for flow. Can see just how many times it reacted to this line up here. What's that? 391.95, and then 386.60 held pretty well yesterday. So again, still it's starting to look more like it's looking like a big pennant as opposed to this head and shoulders setup. Still have alert set on this big dark pool below. And then upside, we have this other dark pool, 397.70. So that's what we'll be watching for on NVIDIA. Just going to see which way we break. The other one I have on the list for today was Snow. Snow got a dark pool last night that it's sitting on here at this 182.22. They also swept into the 200 calls. Those alerted for next week. So for upside, I'm going to be looking for a break of that 185.05. You can see the importance of it over here. Got to break and hold that. If we're going to go to the downside, this is a really conservative put trigger. Really only just because I don't like using the overnight dark pools as the trigger, because I want to see them bounce around that a bit. So if we lose this dark pool and retest and push below, I'd probably get in short before waiting for this. But just you could see the importance of this line as well. That's 178.05 on Snow. And that is all I had for today.
Very nice. All right, everyone. We have, what do we have? We have about 8 minutes until open. 8 minutes till open. Binner, do you have anything else?
Here's the Tesla chart for you.
Yeah.
This is kind of what I was.
Baby wants to go.
This is kind of what I was looking at. Is you've got the midpoint of this leg down right here, 208.34, 618 retracement would be 233.38. On this move up, you can see it pulled down to that midpoint of this move up, that 50% level, right? So now that it's crossed back through the top before pulling back to that midpoint, that targets these extensions up here, 250.56, 267.15, 291. Obviously, there's some things to get through, and that 233 area, being that 618 retracement, is something to have on watch. But that's kind of what I was looking at is, okay, if it crosses through this 220 area, I was looking at 218, that previous high. After that 50% retracement, if it crosses through that, she can go touch 250 in relatively short order, I think.
All right, very good. Thank you, Bender. 7 minutes until open. So have a good day, everyone. See you soon.
Thank you.